Welcome, everyone. Today we're covering Chapter 2, Accounting for the Costs of Products and Services. This chapter is one of the most important foundational chapters in managerial accounting because it introduces cost terminology and cost classifications that we'll use for the rest of the semester. If you don't understand product costs versus period costs, or how costs flow through inventory accounts, later chapters will feel much more difficult. So today we're going to slow down and build the framework carefully. Before we jump into business costs, let's connect this to real life. Keeping track of spending is a crucial part of personal financial management. When you track your expenses, you can develop and stick to a budget, identify spending patterns, and increase financial awareness. Businesses do the same thing, just at a larger scale. Companies track costs so they can determine how much to charge for a product, assess whether new equipment will reduce costs, and analyze how much of a product's cost comes from labor versus materials. In your active learning notes, you should record that tracking expenses helps individuals develop a budget, identify spending patterns, and increase financial awareness. Be sure to note that businesses track costs to help pricing decisions and cost control. Now let's do our first activity. On this slide, you'll see a list of business activities. Your job is to decide whether each one is a planning activity, a facilitating activity, or a controlling activity. Remember, planning is setting goals and budgets. Facilitating is implementing the plan through systems or incentives. Controlling is evaluating results and identifying problems. Pause here and work through the activity. Once you've finished, check your answers with the solutions provided in the back of Chapter 2. Now let's look at the learning objectives for Chapter 2. By the end of this chapter, you should be able to identify the difference between product and period costs and describe the three types of product costs. Explain how product and period costs are accounted for using the expense recognition principle, and explain how production costs flow through an accounting system to determine per unit costs. Please make sure all three learning objectives are written in your notes. Now we begin the first main section of the chapter. The key idea is that not all costs are treated the same in accounting. Some costs are tied directly to making a product. Other costs are tied to running the business as a whole. Understanding the difference is essential because it impacts the balance sheet, the income statement, and how companies measure profitability. Let's define what a cost is. A cost represents resources given up to obtain something in return. Businesses face many different types of costs. Some common examples include manufacturing materials, labor, and overhead. Manufacturing materials could be steel for a car. Labor costs could be wages paid to assembly workers. Overhead costs could include factory utility bills, maintenance, or factory taxes. Make sure to note in your active learning notes that costs represent resources given up to obtain something in return, and note that examples include material, labor, and overhead. This slide highlights why cost information matters. Managers need cost information to make decisions related to planning and controlling costs. For example, how much should we charge for a product to make a profit? How does new equipment affect product costs? How much of a product's cost is labor versus material? These are exactly the kinds of decisions managerial accounting supports. Now we introduce a major classification, product costs versus period costs. Product costs are associated with production. These are costs that are either physically part of the product, like raw materials, or essential to producing the product, like factory labor and factory overhead. Period costs are not part of the production process. Instead, they are incurred in selling products or administering the business. Examples of period costs include office rent, marketing costs, and sales commissions. Product costs can be broken down into three categories. First is direct materials. These are raw materials that become an integral part of the finished product. Second is direct labor. These are wages paid to employees who physically work on manufacturing the product. Third is overhead. Overhead includes indirect costs necessary for production, such as factory utilities, supervisor salaries, depreciation on equipment, and machine maintenance. Overhead is often the most confusing category because it includes many indirect production costs. Please make note in your active learning notes the three types of production costs: direct materials, direct labor, and overhead. Let's apply what we just learned. This question asks, which cost is an example of a product cost classified as overhead? Look at the answer choices and decide which one is related to production but indirect. Pause here and work through the activity. Once you've finished, check your answers with the solutions provided in the back of Chapter 2. Now let's expand on period costs. Period costs are not related to the production process. These costs are tied to selling and administrative functions. Examples include sales expenses such as travel costs for sales teams. Administrative costs include wages for HR personnel. Corporate office costs, including rent and utilities for office space. These costs are expensed in the period they occur. Make sure to write in your notes that period costs include selling expenses and administrative expenses. This slide provides a useful example using an automobile manufacturer. Period costs include sales expenses and the CEO's salary. Product costs include direct materials, direct labor, and overhead. The key point is that product costs are part of making the product, while period costs support the overall business. This slide reminds us that classification depends on the purpose of the cost. For example, insurance could be a product cost or a period cost depending on what it covers. If the insurance covers the factory, it is overhead and therefore a product cost. If insurance covers the corporate offices, it is a period cost. Make sure to make this distinction in your notes. Now let's classify several costs as either product or period. You'll see items like depreciation on factory equipment, advertising, property taxes on a factory, raw materials, and the CEO's salary. Work through each one carefully. Ask yourself, is it related to production or is it related to selling and administration? Pause here and work through the activity. Once you've finished, check your answers with the solutions provided in the back of Chapter 2.